Hey everybody, the election is now behind us, and let's talk about what this means for you in 2025. The outlook is good. Listen up. Welcome everybody to the San Antonio Invest podcast. My name is Brad Larsen. I'm the founder and real estate broker of RentWorks SaleWorks, covering the San Antonio real estate and Austin markets, affectionately called San Austin is what I like to call it. Now, my company offers full service property management and leasing only services for investors, along with us aiding buyers and sellers in purchasing real estate for investments or even their primary residence. Now, after leaving the U.S. Army as an infantry officer, I landed here in San Antonio all the way back in 2003 and have been selling real estate ever since then. So that's over 20 plus years of actively selling real estate here in the San Austin region. The purpose of this podcast is to show you, the listener, some of the highlights and takeaways from the local real estate markets and the national market as how it affects us here. So this is important to you because you're going to pick up some trends, you're going to pick up some updated information, and you're going to get a few stats that might help you in making a decision on purchasing another investment property, selling an investment property, and or moving to the San Antonio region here between here and San Antonio and Austin. So let's get this going. It's time to relish in the post-election glory. So the election is finally behind us. And no matter your political leanings, it's behind us now so we can actually start to move forward with consumer confidence, because that's a big part of what real estate is defined as, is nobody's buying anything if there's no consumer confidence. And uncertainty breeds consumer lack of confidence. So what we want is, now that we have a post-election outcome, and again, no matter your political leanings, you can say good, bad, or other, it's better to know than to not know. So this is a key point of this episode, is we'll be talking about some other statistics that have happened here in the region, but really kind of applying that to what we're going to be seeing here going forward in the Q4, which is basically now, 2024, and also into 2025. Now, I have very high hopes for 2025. I think we're going to have a super fantastic year. I think consumer confidence is key to real estate sales. It's also key to people holding real estate as far as property management and allowing them to hire a property manager like ourselves, because if they feel that things are only going to go up, selling is a difficult decision when you know it's going to be improved next year. It's going to be improved the year after that. And again, it comes down to consumer confidence and what people feel like what's going to happen here in the country. Now, we also have some other things that happened recently with the National Association of REALTORS. There was a big ruling this last year in 2024 that has affected quite a bit of how the actual real estate process works. And this is affecting both property management as far as what we have to do with our investors and our tenants. It also has to do with sellers selling real estate and buyers buying real estate. Now, the history of this is long and lengthy. I'll kind of give you a quick synopsis as to how things came about. There was a group litigation suit filed against the National Association of REALTORS and probably a half a dozen other big real estate companies alleging some antitrust violations. And the truth behind that, or actually not the truth, but the details behind it, because this is something that they hate to talk about, is commissions were basically fixed. You would go into a listing appointment with a listing agent as a consumer, as a seller, and they would say, no, your commission is 6% and 3% is going to a buyer's agent. You don't have a choice to negotiate. So that's what we call price fixing. And there was no opportunity to negotiate that. And at the end of the day, the jury of this case came to the conclusion that yes, all of these processes and procedures were fixing prices and were anti-consumer and against all of the antitrust policies that the country has in place. It only took them 3 hours to slap the $1.8 billion lawsuit against NAR and all these other different real estate companies. So NAR on the ropes came forward with a settlement offer. They're going to pay quite a bit of that. I think it's over $500 million, $500 million, I think. I can't remember the exact number, but it's large. And inside of that, there's all these different rules that we have to follow. We being anybody associated with the NAR, National Association of REALTORS. Now, on a tangent, before I get to the new rules and what it means, the tangent is nobody really wants to be a part of the NAR. Like I don't, my company doesn't. but we have to be a part of the multiple listing service in San Antonio and in Austin. They have not decoupled yet as of today. They have not decoupled the MLS from NAR membership. We don't need the NAR. We just need the MLS. We just need it to do our business because that's the best format right now to advertise homes either for sale, for rent in the San Austin markets. Other markets don't even use those, but we're, I guess, kind of unique and kind of good because a lot more information goes into the for sale side and the for rent side than what you're going to get in any other sort of platform, Zillow or HousePads or Trulia or Realtor.com or any of those others out there. The MLS truly is the mammoth. However, the data is being held hostage and we have to subscribe to an entity that we may not like just to get the MLS access. Okay, that's a side tangent. That's my little personal opinion. You may not care at all. But what we do want to talk about is what it means for sellers and buyers. Buyers first. So buyer agents now have to get a buyer's agency agreement signed up front before they ever go show a property. And that's going to include a standardized, whatever they want to charge commission up front. I shouldn't say standardized. It's going to include a negotiated commission. That's no longer standard. So the commission could be a flat fee. The commission could be your firstborn child. Your commission could be a percentage. And it's really up to the buyer's agent and the buyer to make that decision up front in writing before they ever go start to look at properties. And I think this is a fantastic thing. And we've always been coaching this for years and years. We've been advocates for telling buyer's agents to get a buyer's agency agreement signed up front. And it lays out all of the expectations, it lays out all of the terms, it lays out the compensation, and then who's paying for the compensation. And this is a big part. Now, in this new landscape, the buyer does not necessarily have to pay for the commission, or the seller does not necessarily have to pay for the commission of the buyer's agent. It's negotiable. Okay, that's kind of the bottom of the filter, negotiable. So this is going to be problematic a little bit, where it could lead to some steering. Buyer's agents could say, you know what, that home over there is no good. The schools are no good. It's no bueno. Let's go over there to that home and look at that home because the schools are better and they have nice curtains. And in the background, the first home that I just talked about could be offering 1% buyer's agency commission or 0 or negotiable. Well, the other home over there is offering 3% or 4% or 8% or 50% buyer's agent commission. So you see my point, where buyer's agents are going to look at the commission as the driving factor to lead people to homes that they want to show them. This could be a bad thing. Yes, I know that buyer's agents have an ethical obligation to be a fiduciary to their clients. Come on. All right, I got you. If you believe that, I've got some oceanfront property to sell you in Arizona because people are people. They're going to steer you to the highest paying property that's out there. And that's going to happen both in the residential property management world, where there are co-broker commissions, and in addition to the buyer's agency world, steering is going to be a thing. The pitfalls of this is wait until the Department of Justice gets involved, wait till HUD gets involved and start spanking some of these large companies for accusations of steering. We've already seen it. We've already seen in writing that buyer's agents are not going to go show a property because a commission to their liking is not being offered, or any commission at all. So they steer their tenants and or their buyers to another property. Okay, we're already seeing it. It's not good stuff for buyers necessarily just yet, but it's happening. I think allegations of steering should be taken very seriously and punished, to the hilt. Okay, that's a positive for the sellers on the buyer side. Now let's talk sellers. Now, this is great news for the sellers because you as a seller now have the opportunity to negotiate, 1, on the listing agent side and 2, on the buyer's agent side in separate manners. I'll tell you how this actually works in reality. So what we do is what I'm doing as a real estate broker representing sellers in our area that are our clients, the RentWorks clients. Again, we've been managing their home for years, for decades, whatever, and they decide to sell. They come to me and say, I want to sell. We charge them a flat fee, 2.5% commission rate. Again, 2.5 is our standard flat fee listing agent commission. but it is negotiable. If you want to pay me more, great. If you want to pay me less, we're going to have some issues because that's typically what we have to do in listing the home. We have so many resources. It's very much justified. That's on the left hand. A listing agent commission on the left hand. Our recommendation on the right hand for a buyer's agent commission is to leave it negotiable, leave it open. Don't put a number in the listing agreement. Leave it NEG if you want, because you have the opportunity as a seller to negotiate that buyer's agent commission at the time of the offer. If a buyer's agent calls up ahead of time and says, do you pay a buyer's agent commission? Yes. Include it with your offer to purchase of the client you're representing. So here comes the offer. We have a listing agent commission already fixed, already done, already committed, already signed. Then we have a buyer's agent making an offer on a home to purchase on behalf of their buyer with a X% or flat fee commission, which is negotiable. So depending on the type of offer that the buyer makes, if they lowball you and want a 10% commission, you can throw them the middle finger and tell them to keep walking. If they give you a great offer with a feasible agent commission, chances are you can negotiate that or accept it as is. So this is a great landscape for the sellers to be in right now because of this NAR ruling, and we're in all favor for it. So it was for too long in coming where we saw a lot of listing agents, a lot of buyer's agents, they're just getting their fixed commission all the time, living fat. We were the highest, the USA, United States of America, was the highest paying Western civilized country commissions on the commission structure. So I didn't say that very well, but let's just say it again. In our markets, the USA, we were paying the most commissions for the services of what we were getting compared to any other civilized country. It was 1.5 points higher than certain places in Europe. So yeah, we're paying a lot more in commission than they need to be, which is why that lawsuit came about, which is why the jury took 3 hours to spank the NAR with a $1.8 billion judgment. And obviously the consumer sentiment is agents are getting paid too much in commissions, okay, for what the work they have to do. Now let's rewind a bit. 30 years ago, even 20 years ago, there was no sort of emailing and electronic signatures and all the other junk. When I first started out, it was all paper. Email was coming into a little bit, but at the end of the day, it was still drive across town to get a signature, presenting in person, everything was blue ink. I mean, there was no distance closing. I mean, real estate was harder back in the day. We were even doing faxes, fax offers back when I first started. So yeah, things have changed quite a bit. Now, back to the other side of this is it could be a downside for buyers and sellers in one regard is it makes dual agency more difficult. And dual agency is not intermediary. Dual agency is a seller has their own representative, like they have a lawyer for their courtroom, and a buyer has their own representative, just like a lawyer in a courtroom. So you have two representatives, which are agents representing the buyer, one, representing the seller, two. And it actually works. It has worked for a long, long time because the buyer has representation on what their interests are, and the seller has representation for what their interests are. Now, in this new landscape, it makes that a bit more difficult because really you have to wonder if the buyer's agents are looking out for their own highest paid commission, or are they really trying to represent their buyers? Because previously, and again, this is one of the things that's kind of it's a hit or miss on your attitude towards it, is previously buyer's agent commissions were kind of fixed. They were kind of 3% across the board, no matter what. New homes pay more sometimes, but it wasn't really a discussion point. I mean, it was bad enough to where it contributed to the lawsuit where certain MLSs would not let you put in anything but you couldn't put in a zero for the commission. And you would also get, I don't know if I can say the term necessarily where it makes any sense, but you would get blackballed. I mean, I'm not talking blackballed like they would take away your birthday. They just wouldn't show your properties. Or if you were in a small enough area, they would yell at you at the grocery store or not shake your hand at church. I mean, you would get blackballed if you didn't offer a 3% commission. So that kind of bled into some of these rulings, and it turned into this mass, again, lawsuit. All right, let's get through some of this other stuff because the market stats are going to be kind of interesting for the San Austin market. And the interest rates first. So the interest rates have been kind of up, they're down, they're all over the place, they're kind of flat. There's been some talk about people doing, the Fed doing some interest rate reductions with the election that's behind us. And that could be basically by hell or high water, the administration coming in is going to tell the Fed, lower the interest rates. Now, the Fed claims they're independent. I'm using air quotes with my fingers. They claim to be the independent, but I don't believe that. I feel that a strong administration can bulldog them into lowering the interest rates. That would spur the economy. That would increase job growth, and that would increase the tax revenue that goes into the Fed. So it's kind of it's a good thing if that happens. I don't see any bad from that. Inflation's already here. So if you're talking about lowering interest rates and being an inflationary thing, you're kind of behind the times already. We're already there, thanks to the last administration. So some September and October stats for the San Austin area. Sales were up 2% in September. The average price now in San Antonio is $371,945. So $370 is the average price. The median's $312. So you got some averages going down, some medians going up. And then in the same thing for October, we're looking at the average of 371 with the median price of 309. Okay, so that's good news or bad news. That's just informational news for the October area, September area of the San Antonio region. Now, Austin's looking at, they had gone down to about $425,000 in their average sales price. Their months of inventory is another key stat. I'll go through that. San Antonio has 5.1 months of inventory, and Austin has 5.9. So the months of inventory, this is a good discussion. So again, in my 20 plus 3 years of selling real estate, the turn point is around 3 months to 4 months, arguably, to where it defines a buyer's market or a seller's market. A buyer's market is defined as basically anything above 5 or 6 months. Arguably, you could say 4 months of inventory. So the months of inventory, let's illustrate that point. That's if you had no other homes added to the inventory today, it would take, according to these stats, 5.1 months to sell all of your homes in the inventory without adding any more. If it was a really good seller's market, that would be 2 months, 3 months. At the height in some of these seller markets we've had, it was below a month. I mean, it was super fast. I mean, homes are listing and selling and with multiple offers in a matter of hours. So that market is behind us, but it's not yet a buyer's market where we're talking 6 months or more of inventory. It's on the fringe of it. A true buyer's market is 6 months or more. So that means buyers can go in and just completely lowball sellers. Sellers are getting desperate. Sellers are offering their vehicles, their incentives, their crazy bonuses. And that's going to be an indication of where we are. So we're on the fringe of a buyer's market, and the sellers are actually having to do a little bit more aggressiveness to selling. Another stat that goes with that is the close to original list price statistic. So that right now is sitting at 93.9%. And that's pretty accurate to what we've been seeing. Average, both of them right around hovering 93%. Austin's 92.8, San Antonio's 93.2. So 92, 93%. What does that really mean on the math side? So if you have a home listed for $1 million or $100,000, use zeros for your math, whatever you want to do. If it's a $100,000 listing, you're going to have an ultimate sales price of $93,000. Okay, you took a 7% off of list price negotiable point, and that's been the average. So if people are listing homes at $1 million, they're selling it at $930. If they're listing a home at $100,000, they're selling it for $93,000. And that's kind of where you have to gauge yourself in pricing a home, because pricing is an art and a science. The science of it is you go through the MLS statistics, you look at comparables, you look at Zillow, you look at the tax records, and you say, okay, well, the home's been assessed to XXX on all those three, and you price a home for $400,000. Just easy math, $400,000. And there's some art to that. The art is you don't want to go 401, because people that are looking for a home up to 400,000 won't see the home at 401, because typically agents will listen to their buyers and they say, okay, I got to stop my search at 400,000. Well, some agents will say, all right, I'm going to stop your search at 410 or 425, whatever. But it also can be a point of irritation to buyers when they start seeing homes at 420, 419, 415. Wait a minute. I told you to stop my listing search at 400. I'm seeing these homes at 410. I don't want to go in and negotiate. I just want to see the homes at 390. So you see kind of there's some art and some argument to that listing strategy. But this is also playing into the fact of what we see for the market trend. So it is close to a buyer's market because the sellers are having to give up 7 to 8% off of their list price to get a deal done. Price per square foot is flat at 177 roughly now in the San Antonio area. In Austin, it's just silly. Austin's getting up there towards, where are they at? Let me look at it real quick. Price per square foot is not listed here. Darn it. Okay. So I know Austin, you're figuring you're $50,000 to $100,000 more in price, but also you're smaller in square footage. So yeah, you're probably closer to $250 a square foot there, which what does it really mean? Not much. It's just good information. Average residential rental price is hovering in and around $1,800. $1,822 for September. It was $1,793 for October. Austin's, going to be similar ballpark. You're going to be in that same time. Doesn't really say on these numbers, but you're going to be in the same market. But it doesn't say. Okay, I got to figure that out to get the Austin averages, because we're looking at two different boards. We're looking at San Antonio Board of Realtors and the Austin Board of Realtors. And of course, their statistics, their stats are never really one format viable to another format. So days on market, looking at 72 to 69 for the San Antonio area. Days on market for the Austin area is 70. So 79 to 70, averages are same. And, I do like to bring these up because sometimes you're seeing the Austin market take longer to sell because the prices are higher, but they're not outrageously different. I'm talking a lot about both the two markets, but when I call them San Austin, you start seeing these numbers starting to be similar. And it is, it touches, for example, if we're talking geography, if we're going north from San Antonio up 35 and you hit Buda or Kyle, that's part of ABOR, but also ABOR has a reciprocal showing agreement now with SABOR, San Antonio Board of Realtors and Austin Board of Realtors. So it's kind of like you're splitting hairs. It's not a true delineation of, let's say, San Antonio versus El Paso. El Paso is 8 hours away. San Antonio versus Houston. Houston is 4 hours away to the east. So those are different markets with clear delineation, clear geographic boundaries that separate the two. The San Antonio, Austin, San Austin corridor is starting to grow into each other, and good things are shared with both of them. Okay, the Q4 outlook looks great. 2025 outlook looks even brighter because of consumer confidence going up. Now at RentWorks, we offer full service property management, and we have a great referral fee for agents. It's a 777 agent referral fee with a client return guarantee. And again, that flat commission to our listing side for our clients that are in place at RentWorks is 2.5%. And I'll be personally handling your sales transaction. If you need anything, reach out to me here at rentworks.com. You can email me to brad@rentworks.com. And if you got any questions about the San Antonio market for buyers or sellers, give us a shout. We have buyers agents you can work with to help you buy another investment property. If you're looking to get into a primary residence home out of your rental listing or your rental home, we can help you with that as well. So thanks again for listening, and we'll see you guys in the next episode. Take care.